Good morning, options trading signals members. This is J.W. Jones coming at you with your Friday morning video analysis. Hope everyone had a good day yesterday. Let's go ahead and jump into the charts here. It's 7:31 Eastern Time on this 28th day of October 2011. Let's go ahead and start off here as usual with the S&P 500 E-mini futures contract. This is a daily chart. And what we can see, I don't have a lot of lines drawn here. Here's our neckline that we've been talking about for months, and we are right at the neckline. We penetrated the 200 period moving average, we penetrated the neckline, and now this is we're at a very critical level going forward. Here's why. If prices can hold, if the futures can hold at these levels and they could push higher, and we could be at the beginning of a major run, particularly if Bernanke comes out and issues QE3. What will likely happen, typically during these types of scenarios, what we'll see, we're going to at least see, if we zoom in a little bit closer, we're going to at least see this level tested. Even more so, we're going to come back and test this 200 period moving average. What's going to be the most difficult close for today, if you're a trader, an S&P futures trader, and you're in this position long, let's say you got long yesterday, or you got short somewhere up around when it got up around 1290, when it was just crazy frothy. What happened? What would be the worst case scenario for you would be a close that's somewhere right at this level or slightly below it. Reason being, if we get that kind of price action today, and I'm not saying we do, we could take off and go higher. My point is, though, that would be, if the market does that, it's going to be a very difficult scenario over the weekend. Here's why. If you're long, it's gonna look like you might have a failed break of the neckline, and especially if you get a close below the neckline or right at the neckline, or right at, the 200 period moving average is right there too. But if we get a close in that little cluster right there, right on it, it's a tough hold over the weekend, especially if you've got gains. If we sell through it and we push down through it and get close below it, it looks like you've got a failed breakout of that level on the daily chart, and it's going to induce bears to come in late and try to short. So it's kind of an interesting situation where we're at, and it's going to be, I can tell you, it's going to be tough to trade this until at least Monday. I think Monday may give us a little bit of clarity, but right now that's where we're at. Now let's take a look at a Fibonacci retracement and see what we're working with and see where our levels are. I would point out, after I show the Fibonacci, right now there is a very bearish pattern on the S&P futures in the shorter time frames. I'll get into that in a minute. But here's kind of my point. The 200 period moving average in the neckline rests basically at the 0.382 retracement. That's a very common retracement. So I really think we're going to see that level tested probably today or Monday. If we push through it and we get down to a 50% retracement, which would be 1265, now we would be below. If we get a 50% retracement, we'll be below those key levels. Typically, most retracements are 50 to the 0.618 retracement. Those are typical in terms of retracements of major moves, even if you're looking at one day and what the kind of retracements you're looking at. If we saw prices get much below 1260 at the close, it's going to appear to a lot of traders that we've got a failed break, and you could see some momentum sellers stepping in on Monday if we have an ugly open. So there's a lot that could happen here. I'm not leaning in either direction. I'm just going to watch the tape and make a decision based on what I'm seeing. My only point is that the key level is that 200 period moving average. The close today is going to matter. So don't be shocked if we get some selling, some profit taking going on. Let me pull these Fibonacci lines off, and I'm going to show you this 5-minute chart that I was looking at earlier. It is a bearish pattern. We got kind of this bearish wedge going on the 5-minute chart. And let's take a look here. It's getting almost ready to break down. You can kind of see here's this giant bearish wedge of the overnight session, and we're starting to pick up a little bit of volume. If this thing breaks this level right here on 1270, I guess I got the fibs up. If it breaks this low right here, and I don't know if it is or isn't. If it does, if this level gets taken out, this little low there, if we zoom this thing out a little bit, this thing could fall off a cliff down to about we could see a few buyers around 1273, and if it pushes through there, now we're going to 1270. And if we go back to the daily chart, I'm not saying this is going to happen. I'm just showing members where we're at this point in time and what's going on in the short term. But 1270, if we look at the daily chart, if that thing played out, look where it is. It's literally on the 200 period moving average. So there's just a little evidence supporting kind of what I'm saying, that you're probably going to see that area tested, and there's going to be some profit taking today. That's common after a huge move like that. I mean, it moves huge. One other thing I wanted to say about the marketplace right now, just to throw some ideas around. I'm not going to be chasing the S&P 500 here. The dollar was down 1.9% yesterday. The dollar index futures from the open to the close. That was the day move. 1.9%. The S&P 500. If we take a look at the SPX, it rallied 3.4%. Oil was up 3%. IWM, let's go through, just look at the returns. IWM was up something like 4 or 5%. XLF was up a ton. EEM, huge move, huge. You're talking almost 5-6% right there. So my point is, the dollar was down 1.9, and a lot of these other assets outperformed. Silver, big move. Gold, big move. Oil, big move. And the dollar, I'm not saying the dollar wasn't hit. 1.9 is a big move on the dollar intraday, dollar index. However, all these other underlyings drastically outperformed. The euro was up to 2.3%. So, I mean, that is just a divergence that I wanted to point out to members. It doesn't necessarily mean anything. The market will come back to equilibrium. But there's gaps all over these charts. Let's take a look at something. I'm going to pause for a moment. I'm going to show members a couple other charts, some momentum charts here. Well, as it turns out, you're going to get the full screen here. But basically what we're looking at, this chart right in front of us, it shows the stocks that are trading above the 20-day moving average. This is something that I look at from time to time. Notice in the short term, the 20-day, look at how high prices are. Look at this momentum chart. You're talking about we're at a level that's above every other level we've had since going back to 2009, and we're closing in on it. I mean, this is the highest level we've seen in terms of 20-day moving average. Stocks overbought since over the past 5 years. It's the second highest level. And what you'll notice is that every one of these peaks, immediately following that peak, is a sell-off. And I know that a lot of people will think I'm crazy when I say this, but as overbought as we are, it is not out of the question we could have a rip-your-face-off sell-off. Just because we're so overbought. Even if we had like I said, a 50% retracement of this move is an 8% sell-off. So just keep that in the back of your head. And then to move forward one more time, here's the 50-day moving average. And what you can see here, again, it's not at the highs like the 20-day, but we are not far away. I mean, this is a 5-year chart. So you're at overbought levels that are commensurate with you're in the same quadrant here as the highest highs we've had since 2009. And I'm not saying that the market's topped yet, but it may not be that far away, and if this thing rolls over, it could roll over and fall fast, just because of the quickness of how quickly this thing rallied. If you look, Most of these highs, I mean, here's one for example: 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, maybe 9 weeks. This rally, basically, if we don't count this chop around noise, basically you're talking 1, 2, 3, 4 weeks. That's huge. So just wanted to show that to members. The 20-day and 50-day are overbought. If you look at the 100-day, it's up. It's 60% of stocks are above their 100-day. Most stocks are still below their 200-day, but as we go through the usual suspects, you'll see that the 200-day is not that far away. So let's get back to the charts here, and we'll check on that 5-minute chart of the S&P at the end, just as an exercise that might help members. Let's take a look at the VIX first. VIX got killed. We're well below the 31 support level. We're coming down. It's interesting. The S&P is testing overhead resistance at the 200 period moving average, while the VIX is testing the 200 period moving average down below recent highs. So that's an interesting dynamic. I do know there are several institutional guys that I talk to that are getting long the volatility index here. I'm not going to take that trade just because it's so volatile and it's so. I mean, you're trading the volatility index. It's incredibly volatile. I'm scared that members, might take too large a position sizes. This thing is wild. I mean, this is kind of the type of environment where you could have huge price swings. So I'm not going to get involved in it, but just so members know, the volatility index is testing support. It is very low. We're at the lowest levels we've had since early August. So clearly it's dropped quite a bit. IWM, huge move. Look at this move. I've got resistance drawn in, and it's pretty funny. This resistance level, price came right up to it. I mean, zoomed right to it and pulled back. And that's kind of where we're at in terms of with all these underlyings. They all came up, and most of them either hit resistance or kissed it. Again, as I have pointed out in the past, the S&P 500 is up above the 200 period moving average, but IWM is not. So you're getting some underperformance out of IWM. It should be at least trading similarly. Generally speaking, it's going to trade even more volatile than the S&P. And here we are. We're not even. We're actually a little ways away from the 200 period moving average, which is at the very least interesting, and it's something that we need to keep an eye on. If we take a look at XLF, I mean, XLF is still clearly underperforming. The 200-day is way up here, whereas the I mean, so I'm not saying that they're not going higher, but let's look at sectors that are underperforming. XLF underperforming, IWM underperforming in terms of relative strength against the S&P 500. If we look at transports are they are in line with where you would expect them to be. And what's interesting here, again, we've got some resistance here. We've got major resistance right here on these pivot lows. So you just sit here and say, can the market? It's not impossible that this thing can't go higher. I think it's going to have to consolidate a little bit at the very least, and fill some of these gaps. I mean, this gap was from 86 to 88. You're talking about a $2 gap. So, and there are huge gaps across the board. We're going to see a big gap. EEM, massive gap. That's a 5% gap. It is very close to a 5% gap on EEM. But again, came right up and tagged this resistance level and then flushed lower. So it's not ready yet to break out. With something we'll be watching. On EEM, I wouldn't be shocked. I mean, this thing could come all the way down back here, test this level, and then go higher. This would be healthy price action. It would be some consolidating and fill that gap. And these gaps generally are filled. And if we do get a gap fill, which I mean at some point we will, if we fill that gap in the near term, and I'm not saying we will or won't, but gaps are always filled. If it is filled in the near term, this price point down here is going to be real tough. it's going to be real tough right in here. The market's not going to give us that easy of an entry to get long. So it could be a quick flush down to that level where you just have a few seconds to get in. But I'll be watching to see if these stocks start to try to come back and fill those gaps. Let's go look at the dollar index. I know yesterday I want to talk about this. I've talked about a hard stop, and I obviously confused some members, and I guess I'm very, I didn't intentionally do that. I've only had a couple. I think I've had two people, two members contact me regarding the dollar trade. I will take full responsibility. I'm not going to sit here and I know I was just talking about a hard stop. Going forward, when I talk about stops, a lot of times with hard stops, I'll wait until the end of the day before I close the trade, unless things just go crazy. And yesterday was a crazy day. And sometimes on a move like that, and I'm not saying we don't go lower. We very well may, and I have a plan for that. But we have some sizable losses, but we have so much time. I mean, if we were in the November contracts, we'd be out. I mean, I can tell you that we would have taken the hard stop, gone. But the fact is, we're in March contracts, and quite frankly, there's so many different choices we have to make adjustments, and maybe our adjustments don't really pan out that well, but we can reduce the risk over a period of time to where, we can at least stay in the trade for a little bit and take a chance at getting some of the money back that we lost. We're not playing this to make money. We're playing this to try to preserve some capital, because sometimes on a move like that, I think the dollar is extremely oversold, and I think it's due for a bounce. And I think if it starts to pick up some momentum, it could really go. But I'm not going to sit here and say that I'm going to ride this thing down forever. No, what I'm going to do is I'm going to watch, see what kind of retracements we get. I'm probably going to give it, see what kind of action we get later today. I'll probably give it through Monday, and then we'll be looking to make an adjustment. And our adjustment may be to simply take it off. And those of you that took the stop early, you did the right thing. And that's just the way it is. Going forward, I would like for members, if you're holding positions, don't place trades unless, as far as closing a spread, you're in control of your own account. I'm not making these trades for you. This isn't investment advice. You're just looking over my shoulder. You guys are the ones who are executing these trades. So if you're happy with the profit, take it. I mean, I've had members say to me, "Hey, I've got an 8% profit in 2 days. I'm taking it." Great, do it. I mean, it's your money and you're in control. I'm not. I don't know what your risk tolerance is. I don't know what your time horizon is. So if you're happy with gains, take them. And if you want to have tighter stops, then have tighter stops. If you want to have looser stops, have looser stops. It doesn't, on my end, I'm here to try to teach you. I'm not here to provide, a perfect, every time we're going to make money. That's not going to happen. So there's going to be losses, and that's just part of trading. The key is mitigating those losses, keeping them to where they don't happen that often, and we just move on. So that's just where we're at. And I want to make sure I stress that I wasn't trying to deceive members. I have never, since I started this service, done anything to try to deceive members. I've always tried to be open to help, and I will continue to be that way. But I wanted to share. I know that there was some confusion there, but going forward, if you're following these trades, wait till I post a trade alert before just going off and doing your own thing. Because if I don't post a trade alert, I haven't done anything. I will not front run members. So I don't take trades off until after I send out those posts. As soon as I press send, that's when I start bidding or offering a position. That is how it will be done as long as we run this service. And the reason I say that is because I will not front run members. I will not get out in front of you guys. It's not right. So I wait till the thing goes out, it processes, and then I start bidding. So most of the time when you guys send me your bids, I'm almost always within a few pennies of where your executions are. So that I want to make sure I covered that. But as far as the dollar is concerned, I think we're going to get some kind of retracement here. A lot of support at these levels for the dollar, and the dollar trades pretty choppy. We're really not. We closed at 75 and a quarter. We're really not that far as terms of where our close was below our stops, and quite frankly, with the price action we're getting this morning, we actually, I take that back. We closed at 75.08, and currently we are at 75.20. So we're really not that much lower. Here's my stop level right here, and if we can regain that level, I'll probably maintain the position just to see if this thing can break. I mean, we have plenty of choices and plenty of time to make adjustments, and that's the main point I'm trying to make. Gold futures. Take a look at gold futures. Huge move the last few days. We're waiting for data apparently. Here we are looking at the gold futures daily chart, and I've got quite a few lines drawn on here. Essentially, we've had a huge run up, and I guess my question is, why are gold and silver rallying? If somebody could answer me that, and they're not just rallying against the dollar in the dollar pits, they're rallying against the euro too, which makes you wonder, why are people, what's driving this surge in gold? This pattern is very bullish. I think we're gonna probably see this level right here back tested, this little rising trend line. I think we may see a back test come down here. We may actually take it out just to shake some people out. Then we're off to the races. I will be looking to get long gold sometime in the future if we get a nice setup there. It's on my radar. So it looks like it's broken out, and it looks like it could really go. And that's kind of where I'm coming from with gold. Silver. Silver had a nice move yesterday. Again, it's coming up into some major resistance here, testing that 200-day and the 50-period moving average coming up for a test. Again, it may pull back and come down and test this level before it takes off, and they may just pull back. So I'll be watching those closely. Oil futures, big day yesterday, getting a big pullback today. We're getting a big pullback in some train tracks, as we call them, where we get some 2 big days in a row. If oil leads this market forward, we're looking at a 50% retracement as we speak in oil. That doesn't mean that that's going to happen with the S&P 500, but it is something that we're going to watch. If oil starts to break down, we'll probably see the S&P and some of the other underlying indices and sectors starting to pull back a little bit. Treasuries had an ugly day yesterday, and they broke out of that. We had this bear flag that we've been watching for several days. Big breakdown there. We're getting a bounce. A lot of times you'll see these bear flags come up, drift up, test this support level, the previous support, which is now resistance. You'll see one of these kind of moves where let me see if I can draw it in here. You'll see one of these kind of moves where it comes up, gives you the kiss, and then you go lower. This is a very positive chart for our TBT position that I'm in with members that we've been in for a while. We're writing some cover calls there. The 30-year futures are trading right at support, so this is a little bit different than the 10-year, where we broke down out of the little bear flag yesterday, but held up just shy of support, came down, tested that support on the overnight session, and we're getting a bid right now in treasuries. So that's where we're at this time. We'll see how things shake out the rest of the day. Wouldn't be shocked to see some profit taking early on. Let's go back real quick just to the futures, and then I'll shut this down. I want to get to the S&P futures here and take a look at the 5-minute chart. So here's where we're at. We're having kind of this battle playing out right at that level, these key levels. So we'll have to keep an eye on that and see if they can push through. If they do, we're going to go straight to 1270. We're going to beeline right to 1270. Current price is 1274.50. This level right here breaks 1273.45 breaks. We'll be at 1270 very quickly. So just giving you a little heads up on what I'm seeing on the short term as well. Hope all is well out there. I will be in touch throughout the day. Don't be shocked if we will be making some adjustments for IBM. We may be closing the 180 spread for gains, and then maintaining our rolling our 185s forward to next week, looking to knock out an actual profit overall for the IBM spread, which will be we worked very hard for that, but I do think we are going to get it close to either break even or even maybe even better. So with that said, I'm going to go ahead and sign off here. Take care. I'll be in touch. Talk to you soon.